Hi students, welcome to another exciting session of healthcare entrepreneurship. We are going to pick it up from exactly where we left in the last session. So let us get started. Next is having a marketing plan or strategy. This section details why and how you propose uh, to the market your product and is critical in obtaining funding to pursue your initiatives. So this section typically have the marketing channels and their rationale. So this we have already defined during the customer discovery. Sets goals to direct future marketing efforts. What are you going to do in the upcoming months or years, and how you are going to use the money, right? Sets clear, realistic and measurable targets. How do you know that your marketing or whatever your efforts you are going to put is successful? Right, maybe that leads to the next 10,000 customers that you define as your success metric. So that success metric has to be very clearly placed, right? Sometimes includes timeline for meeting those targets, right? So how you place your marketing plan or strategy, you have to be innovative. You either set timelines that this is what I'm going to achieve in 6 months, a year, year and a half, right? Or it could be certain things like I'm going to double my customer base or make my number of customers whom I reach out 10x or make my profits 10x, things like that, right? May provide a budget for all marketing activities. This is also sometimes necessary. It gives a very clear picture to the investors that this is what the company is looking to do, right? Like they are not wasting our valuable money in something which is not needed, right? So here is an example where you have social media, referral, SEO, search campaign, mobile marketing. So these are some of the heads which could be possible for like an app which you have developed, an healthcare app, and you're trying to distribute the budget across these heads and then showcase that this is how you're going to use your money, right? Or your marketing strategies, right? So this has to be clearly laid out with some text and a nice picture or two. Then next is the financial plan. It is the most essential part of your business plan, right? Because you're going there to ask for money. So you have to make sure your financial plan is very clear and robust. It should not be just I drew a few lines or made something hypothetical. It shows investors the time frame you have scheduled to make profits. Investors are not here to give money for your great idea. They do not care too much about your idea, right? Do they care about your product? Probably not that much. They care about their money. If they have placed 50,000 rupees into your company, they want to get out 5 lakhs or 5 crores of rupees within a certain time frame. That's what they are interested in, right? Of course, in the voyage of doing that, they are kind of supporting your journey. But at the end of the day, they are not interested in your ideas or the products, right? They're actually interested in how they are going to make money in the upcoming. So your financial plan takes the like central point, like while you're discussing your product proposal. Some elements of the financial plan to includes the key financial indicators, right? Break even analysis. This I've explained previously. Break even is when your company is going to start making profit, right? Like that's the point where you are at a point of no profit, no loss. Your company has already spent all the money in investing and has been able to organically generate profits to the point that now you're going to turn from a loss to a profit. That's a break even point, right? So that's a break even analysis, that when that break even point is going to come. Is it 6 months or a year or where exactly? And most of these investors are experts in these areas. So if somebody is from the healthcare devices domain for a certain kind of implants, let's say dental implants, they will understand your plan. It's not like they are not educated to understand your plan. They will understand. And even if you ask realistic like place realistic timelines to things, they would appreciate that more than if you offer something fake, right? So many times, like startup entrepreneurs are so stressed out for their funding requirement, they would just put that I'm going to reach the break even within 1.5 or 2 months, right? That's very, very unrealistic. You don't want to put such targets which you cannot meet, because many of these fundings are milestone based. If you cannot meet your first target, they are not going to fund you further, right? So it's better to keep some cushioning within that time. If you think like you are going to achieve this certain milestones within 5 months, place it like 6 or 7 months, right, so that you have some cushion if something goes wrong. Projected profit and loss. What is the overall profit and loss which is projected with time, right, like this is something they would like to see. Projected cash flow, projected balance sheet, business ratios and long term plans. Many of these I have explained. They are basically trying to look at this very single indicator, that when are you going to generate profit, number one, how much profit are you going to generate in what timelines. These are the two aspects they are looking into. Based on these two aspects in mind, you can place your charts and text accordingly, right. Hopefully this is clear. Next is operations and management. So this section outlines how your company will operate with the new product or service. This includes the organizational structure of your company with respect to the product proposal, provides a basis for projected operating expenses and financial statements, because these statements are heavily scrutinized by investors, right. The organizational structure has to be well defined and realistic within the parameters of the business. So you should not talk like like I'm going to have this big manufacturing plant, I'm going to get space. Be realistic in placing your different operations in perspective. It could be that you don't have a space, or it could be that you are yet to register certain things or get the certain equipments. Be realistic, they will understand. If you fake here and something gets stuck, then things can really be problematic in the journey ahead. And sometimes you may think that you can basically say something to the investors. They are extremely they have a huge expertise in these kind of things. They will understand right away whether somebody is saying a realistic target or giving a wrong target. And many a times if you give the wrong target, then it puts you in a bad point. Not only you will get the funding, but also what happens is they might badmouth about your company to other investors or VCs, right. You may not get funding at all, right. So it's very important to clearly lay the operations and management structure, who is going to do what. Not just say we have planned this huge marketing marketing analysis or marketing efforts which we have planned for the next 3 months, and within this 3 months we think we are going to get 1000 customers. Don't give such unrealistic targets unless it is backed by some kind of research or backed by some pilot study, right. The expense and capital requirements to support the organizational structure has to be also realistic. You should not ask for I need 10 crores of rupees to run an app, right, and hire an app developer or have a few things. That's very unrealistic, right. App developer will not cost a lot. If you are developing an app, you may not need a huge office, right. You may not need a lot of other resources like equipment. So you have to be realistic and basically put your financials clearly, that what is, of course you can put some margin to it, like let's say the app developer or some manpower will cost you let's say 40 lakh rupees, right, in a year. Then that 40 lakh you can increase it to 60 lakh just to have a cushion if you need an additional manpower or something, there is a salary hike or something else is needed, so those kind of things are okay, but it has to be within a realistic regime. For a 40 lakhs you won't ask for 4 crore, right, that's unrealistic, you won't be able to justify it. So it should identify the basis of personnel expenses, overhead expenses and cost of product and services sold. These expenses can then be matched with the capital requirements. Now if you have given a very clear idea of how your operations are and which is going to incur what kind of cost, and let's say the total comes out to be 2.5 crore, now somebody may be willing to give you 5 crore, right. They may give you 3 crore with some certain inflates, but they will probably give you 5 crore. It won't be like your operating expenses are 2.5 crore and they will give you 50 lakhs. That won't suffice, you won't be able to operate as a company, right. So this operation management, if you can see on the figure on the right, you're looking at the different strategies and functions of manufacturing, working capital, supply chain, services, purchasing and supply, product development. All these heads have to be very clearly aligned, that who is doing what is your structure and what is incurring what kind of cost. That's your operations and management, right. Then typically you would have Templates for building product proposals. If you just look up online, you will see a lot of templates. I am not sharing a specific template here because that would be kind of injustice to the different templates which you can have. So, I have just left the slide blank. So, this is a homework for all of you. Go back and look for some product proposal templates and pick a few like PowerPoint templates and start building your product proposal once you are ready with your project, like by the end of this course. The next part which I would like to discuss beyond the product proposal is the deployment. Now we are almost to that point that we want to make sure that we hit the market big and commercialize our product, right. So, there are a few activities which needs to be done before you deploy, and this is reiteration of quite a few activities which we have already discussed during the different lectures. This includes the usability testing. Hopefully, we have done that. So, this is a check mark, right. Establishing the logistics, lead times and build times. We cannot just unrealistically say that I am going to deliver this product to you within 3 days. If you are not able to deliver within those 3 days, if it takes a week or let us say even 3.5 days, some of the customers may complain and you are just getting out in the market. It is not a great idea to fail when you start, right. If you fail at a much more later stage of success, it can be overlooked, but if you fail at your starting point, it will be very difficult. So, establishing the logistics, the clear lead times and build times is very, very important, right. Testing the logistics, lead times and build times, also test it. Do not just assume it, test it on multiple iterations, test it on multiple product or the manufacturing part where like if there is a raw material shortage and things like that can be tested, like, right, like, so just to make sure that your products can come out in the time frame which you are about to declare for deployment, right. Test marketing, we have talked about simulated test marketing, controlled test marketing and several other techniques, right. This test marketing has to be conducted and completed. Most effective distribution channel has to be identified, right. So, these are the things which are very important before you go out and deploy and commercialize, right. You have to know what is the most effective distribution channel, and you would have known this during your customer discovery and product showcasing, right. Sales forecasting, this is again something we have studied. This needs to be very, very clear. What are the funding requirements? That is to be very, very clearly highlighted, otherwise you won't be able to raise funds or sustain properly over the time. And finally, do the beta testing to make sure that some of the customers are already ready to pre-order your products, or once you take the first step in the market, you will get this $100, right. So, these are some of the tests and checks before you deploy. So, here is an example of just a representative example of a donut where you have a prototype which is a design, then you have a minimum viable product where you do not have the nice like all the layers and other things, you have just the minimum viable product of how a donut looks like, and for the customers to try and tell you whether the size of the donut is okay, the base taste is okay, and finally you have the product which goes out in the market. So, these are the different stages you have to test properly before you deploy. So, there is a check for ready for deployment, right, and all these checks are very, very important. Few of them takes the front seat and few of them can take the back seat. So, at least for ready for deployment, you need to have everything in the right side. What is highlighted? It should be a usable, easily usable product. Logistic lead times have to be clear. Sales forecast should be backed by data on similar products. At least initial customer interests and conversions have to be looked at during the test marketing. If you did not have a lot of interest from the customers, then you are probably going to shoot on your foot, right. Distribution channel should be backed by data and success stories that this distribution method is good. You should not just go blindly for online sales and like this, things may not work out for your particular product, right. Enough funding is available for at least 6 months operation. This is also very important. You should be able to at least sustain for 6 months. You should not think like I am going to make money or start making money within 10 days or 15 days or 30 days of launch, right. You should not ever think like that while starting up a company. You should always think of that, do I have enough funds to really sustain myself for 6 months if nothing works? If nothing works, right? Like, this is a point to be noted. There should be a beta testing leading to the pre-launch sales. This is very, very important. So, if these minimum things are all satisfied, then you are kind of ready for deployment. Not ready for deployment, right? When are you not ready for deployment? If it is difficult using your product. It may be a very complicated product, it has to be tested. It is not tested, usability is not known. It could be difficult using your product. Logistics, lead times and build times are changing and not sure will generate projected revenues. So, if there is a material shortage, everything will change, in terms of the product manufacturing or the lead times. And even with the same products, like you are not getting the same quality again and again, and things are changing. This could be an indication that you are not ready for deployment. Go back and change it and make it right, like before you deploy, right? Sales forecasts are based on what you think. This is another aspect where you are not ready for deployment. You have just put some sales forecasts just out of, and you will be surprised to know majority of the entrepreneurs would do this. They would just skip this step and just put a sales forecast that this is what I think is going to happen in the market from some similar products. This is my sales forecast. Not a good idea. It has to be backed by data, right? Initial customer interests were high, but no conversions in test marketing. This is another kind of like a place where you should be careful about deployment. That initially everybody had a buzz about, oh, this is a great product, I think I really want to purchase it. But when you actually start showcasing your prototypes, nobody was there to buy it or even put a pre-sales order, or there was a lack of interest. Then you're not ready for deployment. You need to go back and revisit your product and your offering, right? Distribution channel is based on what we think. Again, a fault, and you're not ready for deployment, right? You're just thinking, let me go online, let me also go, like door to door, and I think both these channels may work fine, right? It is not backed by data or backed by customer discovery or a proper testing, right, in the market. Not ready for deployment. We have some funding and not sure how long we can sustain. This is another surprising fact. You will see majority of the startups are in this zone where they do not know how much they can sustain. They are ready with a very nice and technical product, very excited and enthusiastic about what they are going to offer, but they are not sure how long they can sustain. So, that planning is very important, and without that you are not ready for deployment, right? Next is beta testing went well, but with no sales. So, everybody said great things about our beta testing, but nobody was interested to buy the product. Everybody was like, let it come in the market and then we will see how the sales goes and we'll figure it out. Or just say, you please start your things and we will support it and we'll see. But nobody is actually willing to put their money. This is again another red flag where you know you are not ready for deployment, right? If any of these issues come in, then you basically need to modify your minimum viable product or MVP. You may also need to modify your business model and retest the product and go through a few steps which we have learned throughout the course, right? You may have to jump back, take back 3-4 steps and then do all those steps and reiterate before you actually think you are ready for deployment. Otherwise, it would be like catastrophic failure. All your efforts, planning will go down the drain, right? So it's very, very important that you check through these check marks whether you're ready for deployment or not ready for deployment, okay? This is an example of good deployment strategy for health insurance. If you look at the journey maps, typically the first step of any health insurance company or offering is the awareness phase, followed by the consideration by the customers, and then decision, and then based on the service, when they face their first hurdle, like when they first have a visit to the doctor or there is a surgery and they want to avail the health insurance, that is where majority of the things fall apart, right? So, that service part, and finally if they are happy with the service, the loyalty things come, like where they are going to recommend to other people, please take this or keep on buying that insurance, because you need to renew your insurance from year to year, right? Like, so if your service is poor, they will not renew it, right? So as far as the items are concerned, you have basically the experience of a customers where some potential pain points could be during the awareness phase, the lack of transparency in pricing and coverage. This is what, if you can relate with all of us, like you will know, we have this issue about any health insurance, that something would be hidden. Like, I know this from back of my head that this is how the company is marketed. I think something is hidden, like they are not revealing all the information which they're saying out there. This is typically the mindset all of us have, like when we are trying to buy a health insurance, right? So if you make it very clear that these are the tests covered, this is the pricing, and maybe also give a breakdown of the pricing, then the customers are much more confident that I am informed. Sometimes if things like 35 tests are covered, 1299, including, let's say, a test for cancer, blood sugar and things like that, right, etc., etc. You don't know what comes in that, etc. Then you have a star somewhere subject to condition, right? This is what the star mark is, something the customers are really scared about, that when I actually need something, I will not be able to avail that. That scare is there. So that is the awareness phase, where the potential solution is providing a transparent pricing and policy information, right? Another things which companies would typically do, and you will see this with insurance companies, nothing specifically about any insurance, but this is something you would all observe, is there is this huge policy document for 50 pages or 30 pages, which nobody has the time to go through, and it has a language which very difficult to understand by the end users. So many a times what they do in the policies is they will put certain pointers which many of us will miss out, right? And when you actually go for a claim, that is the policy point which the insurance company will raise, that this, based on this and this policy point on page number 37, your this kind of surgery, let's say robotic surgery, is not covered. And you will never know this while you are buying the insurance. It is only when you go to avail, you will see a lot of things are not covered, and this creates a lot of scare and dissatisfaction within the customers. Next is the consideration phase, where you are basically like, it's a time consuming and limited availability, where many of the people want to take a health insurance, but they are kind of flip flopping, not very sure which one to do, take or whatnot. And there are so many competitors. You will see all of a sudden all the competitors are offering almost the same. Some one is at a lower price, one is at a higher price. Which one should you choose, right? So at this time, it should be offering flexible appointment options and efficient service with the insurance agents for somebody to explain it, or the offering should be very clear, that what is the quality of the test and some things like that, right, which distinguishes your product from another product, right? Then finally, in the decision phase, there could be long wait times and unhelpful customer service. Like, so typically what you would see with insurances is once you pay the money, which is typically the step 2 or step 3, then there is a long wait, and you are kind of scared that I'm nearing an operation or nearing somewhere where I need this health insurance, and there is no confirmation from the customer service. They're just saying it is under process for the last 7 days, and things are not very clear. And after 20 days you find out there is a document missing, right? So this is an area in which the decision of the customer sometime will be shaky, and if they have a poor experience, they'll ask for a refund. Refund is also a pain game, right? Like, many of us have asked for refund. I personally have done that for insurances, and then you will get 10 calls a day. They will try to convince you why not to seek a refund, right? That why do you need a refund, and you have to answer everybody for that. So it's a tough task even getting a refund. It's not that seamless or easy. Few companies it is easy, but majority of them, they will make it very difficult, that you will get so embarrassed after a certain while, you will feel like, okay, let this go down the drain, let the payment go, and I'll go for some other company, right? This is what exactly those companies want, right? Nobody wants to give you a refund. Everybody is here to make money. When you're in the entrepreneurial world, it's all about money, right? So how this can be improved? By improving the customer service response times and staff training. If there are qualified staffs who can patiently answer to the customer queries, that is good. Majority of the phone calling staff you would see with the insurance and other customer service places, it will be very difficult to interact. You are saying something and they will give you generic answers, or they have no idea what you are even talking about or about their products or services, right? So that's very challenging. You need to have trained or expert staff. So this is an example where finally, due to lack of awareness or engagement, when you actually go for availing a service like a health insurance, you end up in a lot of trouble. They put all sort of queries. They say initially that you will get it cashless, later on you don't get anything cashless, and all of us have been there, right? You come after a surgery and you have to spend the entire day trying to figure out the insurance with the like the particular section of the hospital, and they will put some queries into this and that which the hospital has charged, and they will, let's say your surgery costed 90,000 rupees, they have only approved for 35,000 rupees because of this and this problem. You send the query back, it's a total pain, right? Like this is the time where some of the agencies will promote the health and wellness programs and provide incentives as well as give you a very seamless process of getting health insurances, right? And finally, the loyalty. Loyalty, the basic pain point is lack of clarity in the plan updates and changes. So many a times you have purchased a plan with a certain thing, like, and you are using it, let's say after 2 years, right, when you actually need it, like an insurance plan, and there all of a sudden they say we do not cover these kind of tests anymore. They used to be covered, we have sent you some updates over the emails, maybe you have not seen, right? Nobody checks for those updates on a day-to-day basis unless you need it. Right, like, so these kind of things can be really discouraging for the customers, where clear communication of the plan changes have to happen from time to time, otherwise it's very difficult for customers, right? So this gives you an outline of good deployment strategy where like it can be deployed right, but it could be deployed very poorly also, which is currently a gap with a lot of insurance companies or like similar products or services in the market, where they have come up very aggressively, with a nice motivation and nice like agenda in place, but things have not worked out very well. Okay, so here is to our final part. We want to learn about launching startups and learn a little bit of rules and how we can start a company in India. Like of course there is no difference between a healthcare startup here, this could be any startup, but I thought this could be a nice conclusion to the commercialization aspect, where as an entrepreneur I would like to know how to start a company and not always think that this is a very difficult task which I have to outsource and things like that. So let's get started on this. So startup in India, a startup is typically defined as a newly established business, usually small, started by one or a group of individuals. What differentiates it from other new businesses is that a startup offers a new product or service that is not being given elsewhere in the same way, right? Of course, you are providing something unique. The keyword here is innovation, and we have talked about this at length. This is what differentiates a startup from a regular business, right? The business either develops a new product service or redevelops current product services into something better, right? So the innovation component is very important, and that's what the Indian startup ecosystem is based on. We want to come out with something innovative which solves the people real problems, and here specifically with the healthcare problems, and it is not only for profit, it's also for delivering the right products and services to the customers. So some of the top Indian startups, if you look at, are for example, not in the healthcare space specifically, these are in general. You can see Flipkart, Paytm, Byju's, Oyo, Udaan, Ola. This may not be latest updated, but these are some of the big brands you can associate yourself with, right? Like Policy Bazaar, Lenskart, for example. These are all within this huge valuation startups, right? So the startup registration in India goes like this. As a step one, you incorporate your business, that is what the term is used, incorporation. Then you register with Startup India, which is one of the key portal hub in India, like for startups. Get DPIIT recognition, this is another step. Then you have a recognition application, and then as a step 5 you send the documents for registration, then you get a recognition number, and there are few other areas to look at, right? Like, so these are the key steps of a startup registration, right? So, incorporating your business, what does it mean? You must first incorporate your business as either a private limited company or a partnership firm or a limited liability partnership. These are the most popular options out there. Private limited companies commonly abbreviated as PLC, limited liability partnership LLP, and you could, one of the most common one is a partnership firm, right? Like, and the most common ones in terms of startups which are developing innovative products or services is the PLC, private limited corporation. I'll talk about the differences, what they exactly mean, what they stand for as we go along, right? You have to follow all the normal procedures for registration of any business, like submitting the registration application, obtaining the certificate of incorporation or the partnership registration for partnership firms, right? You can incorporate a PLC or LLP by filling the registration application to the registry of companies, which is ROC of your region. You can establish a partnership firm by filling the application for registration of your firm with the registrar of firms of your area. This is the difference. The place where you register is different for PLC, LLP as well as compared to the partnership firm, right? Partnership firm is usually much more easier to incorporate. You need to submit the required documents and fees to the registrar of companies or registrar of firms, like these are the two heads, along with their registration application for both the purposes. So, whether you are doing PLC/LLP or the partnership firm, that is a separate purview, right. Next is registering with Startup India. The business must be registered as a startup. To do this, the entire process is simple and online. Visit the Startup India website and click on the register button as shown below. There is, you can do this homework, get to the Startup India website and click at the register button. You have to enter your name, email ID, mobile number, password, and click on the register button. Next, you get an OTP for verification, and then you have some other information which is usually filled, and then you hit the submit button. Once your profile is created on the website, startups can apply for various acceleration, incubator, mentorship programs or other challenges on the website, along with getting access to resources like learning and development program, government schemes, state policies for startups, and pro bono services. So, a lot of these services, and like you can apply to incubators, you can seek funding, look out for grant schemes and things like that becomes available once you registered on Startup India. So, this is a good practice. Then get the DPIIT recognition, right. So, the next step after creating the profile on Startup India website is to avail the Department of Promotion of Industry and Internal Trade. This is DPIIT registration or recognition. This recognition helps the startup to avail benefits like access to high quality intellectual property services, like we have already talked about the IPRs and like patents, trademarks and things like that. So, you get access to these services, right. And resources, relaxation in public procurement norms, self-certification under labor and environmental laws, easy winding of a company, access to fund of funds, these are access to various VCs and bigger funds, tax exemption for 3 consecutive years, tax exemption on investment above fair market values. There are several aspects which become available, right. Like I am not getting into all this specific details because that's something which comes like handy later, right, like not during the registration. For getting the DPIIT recognition, log in with your registered profile credentials on the Startup India website and click on the DPIIT recognition for startups button under the schemes and policies tab. this is something you can do, and I'm sure there is a YouTube video on the same, like which you can avail. Like this is just to give you an insight on where you need to go, right? And this is all based on public information and may have been updated a little later, like this is 1.5-2 years back kind of latest information which I have, like, so things may have changed a little bit like over time, right? So that's the caveat. Next is this, for the step 4, you have the recognition application. So on the startup recognition form, you need to fill the details such as entity details, full address, your office address, you need a particular address, then authorized representative details, that could be you, like if you're the entrepreneur, and who are the directors, partner details, information required, startup activities, and self certification, right? Click on the plus sign on the right side of the form and enter each section on the form. So there is a lot of form filling about your information and about the company, right? After entering all the sections of the startup recognition form, accept the terms and conditions and click on the submit button, right? So there are several documents which you need for registration, like first is the incorporation/registration certificate of your startup which you get, proof of funding if you any. So if you have any proof of funding, like if you can show some bank statements or somebody has given you some money, or a letter of intent where a company has talked about giving you, let's say, a certain amount of money, or any bootstrapping, like where let's say it's funded by your father, or like your family or friends, like, or somebody else, right? Or you have secured some funds from the grants or crowdfunding, things like that. So proof of funding, authorization letter of the authorized representative of the company, which is like LLP or partnership firm, so you get an authorized letter, proof of concept like pitch deck, website link, video, if you have a nice representative video, some prototype, or you have a website or an app or something, like which showcases part of the company in case of validation, early traction, or scaling startup, right? So these kind of informations are typically required. Patent and trademark details, if you have any patents associated with your products or services and things like that, right? List of awards or certificates of recognition, if any. The PAN number, right? This is very important because all the details you need to apply for a separate PAN for your startups typically, and all your business taxes will come there, right? So it is typically not the same PAN which you have for your personal purpose, right? So all these documents are typically required for registration. Majority of the things, if you spend some time, you will be able to do it by yourself, because if you try to outsource it from somewhere, like it can cost you from 10,000-15,000 rupees to anything, right? They can charge you hefty amounts of funds like 70,000-80,000 rupees also, and you would not know exactly what those charges are for. Typically the cost of incorporation is not very high, right? It is within a few thousands and below 10,000 rupees. That's what typically, as per as the best of my knowledge is. Step 6 is the recognition number, which is, that's it. On applying, you will get a recognition number for your startup. The certificate of recognition will be issued after the examination of all your documents, which is usually done within 2 days after submitting the details online. However, be careful while uploading the documents. If on subsequent verification it is found to be obtained that the required document is not uploaded, or the wrong document uploaded, or there has been some forgery or forged documents have been uploaded, then you shall be liable to a fine of 50% of your paid up capital of the startup, with a minimum fine of 25,000. So there is something which is known as the authorized capital and the paid up capital. These are very common terms which you use for startups. So authorized capital is typically how much you think your entire startup valuation is. Like typically it starts from 1 lakh rupees on. So your authorized capital, let's say it's 5 lakh rupees. So if you just want to have 10% of that 5 lakh rupees you want to pay initially, then you are paying like 50,000 rupees as a whole, right? So your authorized capital also defines your overall share. So your 5 lakhs is your 100% shareholding. If you have paid 5 lakhs, then your paid up capital could be 50,000, which is 10% shareholding. If it is 5 lakhs for authorized capital of 5 lakhs, it is 100% shareholding, right? So here what is being said is, if there is some wrong documents placed or there is some misappropriation or forged documents which are done, you pay at least 25,000 rupees fine for wasting the time of the Indian government, as well as it can you could be liable to fine up to 50% of the paid up capital. So if you have paid like 50,000, like up to 25,000, which is here the minimum, so you will be charged 25,000. If you had a paid up capital of 3 lakhs rupees, then up to 50%, like 1.5 lakh rupees, so that could be a huge fine. So we all have to be careful on that. Some other areas like patents and trademarks and design registrations, if you need any of these, you can easily approach any of the list of facilitators issued by the government. You will need to bear only the statutory fees, thus getting an 80% reduction of the fees. So if you look at majority of the patents, trademarks or design registrations, we outsource it, right? Like as an institution, we always outsource it, and they will charge you like anything. They can charge you 20,000-30,000 rupees to even lakhs of rupees. So most of this outside firms, they know how much money an institute or a company has, and they can charge you anything. So you can do all of these by yourself also and get a heavy discount. Funding, in order to provide funding support, the government has set up a lot of schemes. I think the government is extremely supportive about startup ecosystem, and specifically in the healthcare domain. There is a complete focus on not only Make in India, it's also Startup India, like, and the focus is on the specific areas like healthcare technologies, right? And there are several other areas which are of focus. Mental health has become a focus trend, right? Like, so a lot of these fundings are coming in, right? But medical devices or healthcare technologies, healthcare innovations are always the focus, right? And it's going to be the same for the next years to come. So the government has set up a fund with initial corpus of 2,500 crore and total corpus of 10,000 crore over a period of 4 years. This is a little backdated information. This is 2,500 crore per year, and this is based on some previous public information which I had like almost 2 years back. So this may have changed. So I'm not quoting these values. So they have to be just taken as a representative value, which can be. So basically, this is just to show that the government has put a lot of funds into funding startups. The funds is in the nature of funds, what is known as, which means that it will not invest directly into startups, but also shall participate in the capital of SEBI registered venture funds. So a lot of these venture funds are now regulated by the government, and they have participated in several of these funds, right? So this is to be just taken as a public information and not the latest updated, like a few of this information may have completely changed over the last 2 years. So with that caveat, let us just have them as a representative value. Self-certification under employment and labor laws, startups can self-certify under these laws so that the compliances costs are reduced. So startups have to go through a lot of compliances. So these certifications are provided to reduce regulatory burden, thereby allowing them to focus on their core businesses. You don't want to put your full energy into what all compliances I want to go through in a yearly basis, and which things are to be adhered to. You want to focus on your business and your product, right? So in order to do that, you can do a lot of self certifications, which are there, which will allow you to basically bypass or relax those criteria, right? Startups are allowed to self certify their compliances under 6 labor laws and 3 environmental laws for a period of 3 to 5 years from the date of incorporation. After that, things become more stringent. Units operating under 36 white category industries are published on the website of the Central Pollution Control Board, do not require clearance under 3 environmental related acts. This is just for information, may not be specifically applicable for healthcare startups. Tax exemption, startups are exempted from income tax for 3 years. This is also based on public information which I had like almost 2 years back. This may have changed over time, right? So don't take this as a word like on what the latest policies are. For the latest policies, you have to look at the Indian government website and Startup India website, what the latest norms and policies are. But to avail these benefits, they must be certified by the Inter-Ministerial Board IMB, the startups incorporated on or after the 1st of April can apply for income tax exemption. I think this was the rule for a while. Things may have changed now in the past 2 years. So, the latest like laws and latest norms have to be seen and have to be complied with, right. So, what are the different types of business structures in India? The first one is a limited liability partnership, which is typically ideal for service oriented business, LLP, or businesses that have low investment needs, right. The tax advantages are benefits on depreciation, and the legal compliances are business tax returns to be filed, right. So, these are the only legal compliances, and limited liability partnership is somewhere a particular individual will not be liable if the business goes bankrupt, right. So, if you are dealing with low investments, you can go for a LLP. Then there is this one person company where there are sole owners looking to limit their liability. So, typically the tax advantages are taxed holidays for the first 3 years under Startup India, higher benefits on depreciation, no tax on dividend distribution. These are some of the benefits. This is also based on public information and may have changed in the last 2 years, right. So, just look at the latest norms and policies, right. This is some just basic information which I wanted to provide. Do not take this as absolute information for anything, right. This is only something which is taken 2 years back. So, the legal compliances are business returns to be filed, limited ROC compliance. Then there is private limited corporation, which is the most common businesses that have a higher turnover and is going to make a lot of money, and typically the same tax holiday for the first 3 years law was also applicable, but this may have changed, right. Business tax returns to be filed, and an audit is mandatory for these PLC type of companies, right. Also, for public limited company, businesses are usually with a very high turnover. They have certain tax exemptions under a few laws, rules and regulations. Business tax returns may be filed and mandatory audits. So, these are public limited corporations which are publicly like registered, or the registered companies, right. Like so those have different like rules and regulations to follow. So, as far the LLP registration is concerned, it is a hybrid structure between a partnership firm and a private limited company, where the business is carried out in a corporate framework guided by terms of mutually adopted partnership deed. There is a mutually adopted partnership deed which is signed. What are the advantages of registering an LLP over a general partnership firm? Like, why not have a partnership firm? Liability. So, in general, partnership firm partners are personally liable for debts of the business, which means that even their personal property may be used to settle the firm's debts. So, this is very important to consider. Many of the CAs may tell you that why don't you go for a partnership firm? If you are at some kind into some kind of healthcare startups which are where if the product goes wrong, you can incur a lot of losses. These losses can account you or lead you to even having your property taken away. Okay. So, that is the problem with partnership firm. So, you should not register a partnership firm when you are looking at very sensitive or things where your company can possibly get bankrupt if things do not work out for you, or there is a dispute within the company, things can go wrong, right. So, in order to limit the liability which any kind of issues with the company may have, like on you, it is better to go for a LLP than a partnership firm, right. Of course, there is some liability, you are owning the company, but the liability is limited. There is a immunity against wrongdoings of other partners with an LLP. So, there could be one partner who is misappropriating funds or has stolen some funds or done something wrong, and things have gone wrong for your company. So, you get immunity from that, right. So, under LLP structures, partners are not responsible for negligence or misconduct of other partners, whereas in general partnership firms, partners can be held responsible. If somebody has done something illegal, you could also be put in jail, right. Like, so these kind of things can happen like with partnership firms, but not with an LLP, right, where somebody has done something wrong. Of course, you will be scrutinized or audited, but your liability is limited. So, the typical documents to be submitted, and this is taken from the website Clear Tax, this is also a little bit older information. So, this is photo ID proof of the partners, the address proof of the partners, specimen signatures, ownership proof, no objection certificate from the owner of the property. If you own your own property, then it's okay, but if you're renting a property or living somewhere else, you need a no objection certificate, rent agreement of your registered office, right. So, these kind of documents are typically required. Further, does the income tax treat partnership firms and LLPs differently? That this is something good to know while you are trying to choose the right type of company framework which you want to adopt. Both general partnership and LLPs are taxed at flat rate 30%. This may have changed again, like, so I am not quoting any of these percentages. This is to be taken as a generic information, like these percentages are subject to the laws of the land which change with time, and this you have to look at the website of the Startup India and the Government of India to look at what are the latest norms, but these are some generic norms almost 2 years back information which I have gathered, right. Like, so both these are taxed flat. All the other income tax provisions apply similarly, except that general partnership firms are covered under presumptive taxation schemes. If turnover is below 2 crore in business or 50 lakhs in case of profession, there is no need to maintain books of accounts or get accounts audited. This may have also changed over time, right. LLPs are explicitly not covered. What is the minimum capital requirement for LLP? There is no minimum capital contribution requirement. It can be registered even with rupees 100 as the total capital contribution. I think this is a lot higher right now with the latest norms. It could be a few thousands, right. Like, so look at the latest norms. So, advantages of LLP: it is a separate legal entity. Let us look at the figure on the bottom right. In LLP, where a partner is not liable for all losses of the company, the partners of an LLP have the right to manage the business directly. Post incorporation, an LLP can have limitless partners, right. This can have as many partners as possible. You can keep on adding partners, right. An LLP can raise funds from partners, banks, NBFCs and so forth. If there is one partner in an LLP, then the sole partner can find a new one without dissolution, right. You can have more partners without having to change too much into the company. Of course, you have to inform to the necessary agencies that what is the change, but you do not have to explicitly spend time on it, right. What is the audit requirement for the LLP? Accounts of an LLP are required to be audited when the turnover is rupees 40 lakhs or more, or when the total capital contribution is 25 lakhs or more. This is again based on some previous public information almost 2 years back. So, these are not quoted numbers. Please check on the latest numbers which are there, right. The auditor of an LLP is appointed annually by the designated partners. The first auditor is appointed before the end of the financial year. Subsequent appointments or reappointments of the auditor is made 1 month before the closing of the financial year by the designated partners, right. So, there are two types of LLP audits. One is the LLP audit, which is turnover exceeding 40 lakhs in financial year, contribution exceeding 25 lakhs, and tax audit for turnover exceeding 1 crore in cases of business, while 50 lakhs in the case of profession, right. So, these are some of the numbers which I have pulled out from public information and may not be the latest. One person company registration allows an individual to reap benefits of being a company with limited liability. The individual can take riskier decisions without having to worry about losing personal assets like mortgages or your house going away, and this has encouraged many startups and young entrepreneurs to register as an OPC. So, who is a one person company? A common example is like a doctor who is practicing in a private clinic, right. That's usually a one person company registration. This is the most common one which we can think. How is OPC different from an ordinary private limited corporation? So, private limited company can be formed with a minimum of 2 directors or shareholders. I am going to explain private limited company. The directors and shareholders can be the same individuals. One person company does away with the requirement of minimum shareholders. It allows a single entrepreneur to get his business registered at a company and get limited liability protection. These are some of the documents which are needed. Many of them are kind of same. This is for generic information, right. What is the minimum capital requirement for starting an OPC? An OPC can be started with a minimum authorized capital of 1 lakh rupees. There is no mandatory requirement for minimum paid up capital. I think this was the case a while back, this may have changed now, right. So hence you can start a OPC with a capital contribution as low as rupees 2. This may not be true. I think it's a few thousand rupees as per the latest norms. That has to be checked. However, when the paid up capital exceeds 50 lakhs, OPC must mandatorily convert to a private limited corporation. This is a rule also which may have changed. I think this may not be the latest information which is there. Also, when the average turnover for 3 consecutive years become 2 crores or more, there is a need to convert into a private limited corporation. Many of these rules are flexed by the government based on the requirement of the entrepreneurs. So, it is fairly flexible and things keep on changing. So, it may not be the latest information, right. Is there a tax advantage on forming a one-person company? There is no specific tax advantage to OPC over any other form. The tax rate is again flat, maybe at a 30% or maybe lower or higher as per the latest norms. Other tax provisions like minimum alternate tax, dividend distribution tax, as they apply to any other form of company, right, like would come to a one-person company. So, no specific benefits in terms of tax. So, overall benefits of one-person company: it is a separate legal entity, protected liability, separate management from the ownership. So, it is not your personal ownership, it is a separate management, more credibility, helps in expansion, nomination provision for continuity of business life. So, these are some of the advantages, right. Further, what are the mandatory compliances? So, the basic mandatory compliance are maintaining proper books of accounts, statutory audit of financial statements, filling of business income tax return every year before whatever the date of tax return is, filing annual ROC, which includes from statement of disclosure of shareholders and directors. This is common for majority of the companies. What is the eligibility criteria to become a one-person company? A natural person who is a resident of India and Indian citizen who is living in India for period of 182 days is eligible to act as a member and nominee of an OPC person. A person can only be being member of one OPC. If a person becomes member or nominee for 2 or more than 2 OPCs, then he has to withdraw his membership from the OPC within 182 days. So, you cannot have too many one-person companies, right. There are some mandates there. So, these may not be the latest numbers or information. Please look into the Government of India website for the latest information. This is a little backdated information, right. Types of annual compliances and mandatory annual compliances: conducting the board meeting and annual general meeting, auditor's appointment and filing of the form ADT 1, preparation and filling the annual return, disclosure of directors interest, filing DPT 3, filing MSME 1, preparing the statutory register and directors report. These are some of the common compliances you have to adhere to. Finally, we have learnt now about some of the representative structures which are available for setting your businesses. Finally, now that we have learned the entire course from the ideation to deployment about healthcare devices, products and services, and we have learned how to register a company, the final thing we would want to just pay quick attention is to the startup scale up. How do you have your company to scale up, right? You have to develop the right strategy, you have to invest in technology, outsource non-essential activities. There are several activities you do not want to do by yourself, outsource them, improve your marketing and improvise, right? Improve reputation, hire the right people, and finally make startup work out with you, right? And then I wish you the best for making the best healthcare startup which you can possibly have.